Welcome back to the Patrick Lane Show, where we talk about personal finance, investing, and real estate. We appreciate you coming back to the channel. Do me a favor, go ahead and smash the like button right now and get it out of the way. It'll really help us build the channel, and we appreciate it. Tap that subscribe button and ring the notification bell so that when we post a new video, you get to see it first. Today we're going to talk about how GameStop may be put to an end by the new Biden administration SEC chair. That's right, Gary Gensler, who is testifying today on Capitol Hill because he's a nominee for SEC chair. That's the Securities and Exchange Commission, which regulates and oversees the stock market and trading in the United States, is up on Capitol Hill, and he's testifying right now that GameStop, not necessarily GameStop itself, but the trading and gamification of trading by apps like Robinhood and Webull and all of the others that we use, he's going to look into as a priority if he is confirmed in his position as SEC chair. Here's the thing. What is gamification? What do they mean when they say everything is gamified and gamification is bad? Well, if you have the Robinhood app or some of the other apps for trading that are on your phone, you know that it doesn't look the same as an app that traditional traders might use. The old way was that you went down to somebody's office and they sat behind one side of the desk and you sat on the other side of the desk and you talked about what stocks you wanted to buy, and then they would put the order in for you. Well, a few years ago, Ameritrade, E-Trade, TD, all of these came out with zero commission trading platforms. And then Robinhood took that one step further and developed the Robinhood app, which is what a lot of us have on our phones, and we trade right now with the Robinhood app. So when you log into Robinhood, instead of going down to somebody's office downtown, you can log in on your phone, buy a stock, and when you buy a stock, the app will shoot off confetti. And then there are other incentives for referring people, reading information, educating yourself about different stocks, signing up for different things, making deposits, all those sorts of things. But there are rewards and incentives to do those things. The people who want to eliminate easy retail trading have coined the phrase gamification. And that means that they are arguing that Robinhood and other apps are treating trading like a game, like a video game, because when you make a trade, a little picture of confetti pops up on your phone. And to them, enjoying trading apparently and treating it like something that you would have fun doing is very, very bad. Gary Gensler and people like him at the SEC and in Congress are wanting to crack down on gamification of trading and investing. Now, what does that mean for the regular people out here, the retail traders? Well, it means, frankly, that it's going to be harder to trade because not only are they going after gamification, but they're also talking about going after the way that Robinhood, Webull, M1, and other trading platforms that we use on our phone are free. And the reason they're free, and we've talked about this in other videos that came up with the whole GameStop issue, the reason that it's free is because we don't pay Robinhood, but the market maker that Robinhood sends the order flow to pays Robinhood. And so Robinhood receives its revenue from someone other than its true customers, you and I. And for some reason in Congress and other places, that has become a bad thing. And while it does create some questions about conflict of interest and where the true allegiance lies and who is the real customer for Robinhood or Webull or other trading platforms, what it does is it allows Robinhood to offer to you and I free trading. So we don't have to pay. You know, it used to be that if you went down to that office that we just mentioned downtown and went and sat in somebody's office and told them what you wanted to trade, that you had to pay them to execute that trade. not only did you have to pay for them to actually hit the button and execute it, but then you had to pay a certain percentage of your portfolio to them just to manage it. So just in order to be a client of theirs, for the privilege of them hitting the button and investing your money, you had to pay a percentage of your portfolio, and you had to pay them to execute each trade. Well, what's the effect of that? What's the impact of that? The impact is that you've got to have money, a sizable chunk of money, to invest in order to make it worth your while to actually pay the commissions and the fees to trade. And so what happened with the online portals, the free trading, particularly the Robinhoods and Webull's of the world? When the fees went away, then everybody who had a phone could sign up, download the app, and start trading immediately. You didn't have to pay. If you had $100 and you wanted to buy $100 share of a company, you didn't have to pay $8 plus 2% to somebody to trade that trade and buy one share. If when back in January when GameStop was $15 a share, you didn't have to pay somebody $7 or $8 per trade and 2 or 3% to buy one share of GameStop. You could log onto your phone and buy one share. Now, obviously, that is a good thing because it allows more people to be invested in trading and the stock market and trying to put away money as a nest egg and savings for the future. But again, Gary Gensler, who is Biden's nominee for Securities and Exchange Commission commissioner, is saying that that is a bad thing, that we don't want gamification because it makes it too fun to invest. Heaven forbid people put away money for retirement and enjoy doing it. And number two, he thinks that the retail investor surge, where retail investors don't pay for their commissions for their trades, is actually a bad thing. We can certainly do that, and we can do it without attacking retail traders. And that, make no mistake, that's exactly what this is. Okay, Gary Gensler, the idea that you can't gamify trading apps, and you cannot have payment for order flow, which allows free trading for you and I. Those are attacks on retail traders because without that business model, those two things are going to be eliminated. Companies like Robinhood and Webull have to receive revenue from someplace in order to keep in business, to stay in business. So where is that revenue going to come from? If they don't get it on the back end from order flow, they're going to have to charge us up front, which is going to make us a lot less likely to buy that one share or two shares or a handful of shares when we want to do that as we're sitting on the couch and watching Netflix or something. But it shouldn't be a surprise for two reasons that the gamification and the order flow are under attack, because Robinhood is a startup. It's been around for a few years, but it is focused mainly on retail investors. And if you look at Gary Gensler's past, guess where he worked? Goldman Sachs, one of the biggest investment banks and brokerages that is out there. So he is tied into all of the old guard, the people who want to control the market, control the order flow, limit who can buy and how much they can buy. And more importantly, he wants to make sure that we as retail investors have to pay to play with the big boys on Wall Street. And that's just not something that's going to bode well. Now, GameStop certainly brought this to light. And things like GameStop out there have actually been talked about as being delisted from trading in the stock exchange. I heard someone the other day talking about how that every stock under $5 on the New York Stock Exchange and the on NASDAQ should be dropped off immediately. They want to consider those penny stocks and not trade them. And in fact, just over the last few days, the SEC currently has suspended 22 stocks for, guess what? Not because there was any shenanigans, not because of any bad practices of the businesses, but specifically in the press releases, the SEC said that they were suspending these 22, trading in these 22 companies because of social media influence on the price. So what does that mean? That means that you and I, retail traders, were on Wall Street Bets or on some of the other Reddit chat rooms or discussion boards, or we were in Facebook, or we were on Twitter, or wherever we were talking about stocks that we like, and the SEC and the big boys on Wall Street didn't like that. So what happens? The SEC comes out with a delisting order for 22 stocks. So I just wanted to touch on that today, and was this something that we've got to keep an eye on over the next few days and weeks and into this new administration that we have. And look, regulation is a good thing if it evens the playing field, if it makes the market efficient, and if it makes sure that the big guys that have all the money aren't at a specific advantage over us retail traders. And that's fine. We also don't want somebody to come in and say, oh, we're going to protect the little guy, the retail traders. And how are we going to do that? By not letting the little guy trade in the stocks they want to trade. To me, that's not protection. That's not protection for the retail trader. That's protection for the big investment banks and hedge fund traders on Wall Street. And that's not the way we should be going at the SEC. So do me a favor, let me know what you think down in the comments. And should we worry about the SEC? Should we worry about Gary Gensler being confirmed? Should the SEC be delisting stocks that are talked about on Wall Street Bets and Reddit and other social media platforms? Or do you think the government really has our best interest in heart and they really just want to protect retail investors? Let me know what you think down in the comments below. That's it for today. Thank you for taking a look at the video. We really appreciate it. If you've received any education or entertainment out of this video, do me a favor, smash that like button right now. We really appreciate it. It's going to help us to grow the channel. And also do me a favor, share this video to somebody else who's a friend of yours who you think might be entertained or get some education out of it. We really appreciate that too. We'll see you in the next video.